How to Read Candlestick Charts Easy Tutorial for Beginners. Hi everyone, welcome back to another video. In this video, I bring you back yet another trader's secret. So, what we're going to do in this video. In this video, I'm going to be showing you candlestick charts and how you can really use them for trading. Now, let me first tell you what candlestick charts are. Candlestick charts are basically charts that tell you the value and the happenings of different cryptocurrencies, and traders use them all the time because it helps them realize what kind of crypto goes up, what kind of crypto goes down, and it tells them different time periods in which they buy or they sell, and it can also show them if they should invest in some specific type of crypto or not. So I'm just going to show you the basics of it, and it may seem a bit complicated because there's a lot of numbers and a lot of graphics going on in that chart, but do not worry, I'm going to take you right through it, and this is going to be the easiest guide you find online. And yeah, I'm just going to get you through it, and by the end of this video, do not worry, you're going to know how to read candlestick charts like a real trader. So let's get right into it. First of all, obviously, you're going to write any type of cryptocurrency you want, and then you're just going to write candlestick chart in front of it. Now, once you've done that, you're just going to go on any one of these links. Obviously, you can use a platform like Coinbase.com, or you can use any other Crypto.com, Binance. You can use these platforms, but I'm just showing you the main basics of it. So I'm just going to go to the main candle charts website. So once we're on there, we're going to see the candle chart for Bitcoin. So once this loads up, there we go. So this is a candle chart of Bitcoin. I know it seems highly complex, but do not worry, it's not as difficult as it looks. All you have to understand is what these things are and what they do in context with the months and time over here and what these numbers mean. So yeah, let's get started then. So you have this huge interface in front of you. This is basically your chart. And how we can work around it is that, first of all, up here we can see the time interval. Now you can set this time interval to 1 minute, 30 minutes, 1 hour, 1 day, 1 week, 1 month. Now what this does is that it shows how much of these charts change in 1 day. So for example, every single chart over here, every single candle over here represents 1 day. So this green candle is 1 day. Then this red candle is the next day, this is the next day, this is the next day. So basically every candle represents 1 day. If you do 1 hour, now look at that. This represents every single hour. So this is 1 hour. For example, this is 13. This is 14. This is 15, basically 3 o'clock, then 4 o'clock, 5 o'clock, 6 o'clock. That's how you differentiate between that. And same goes for 30 minutes and 1 minute. Now, most traders use 4 hours or 1 day. So yeah, let's go on 1 day for now because that's much easier to explain. But yeah, let me just tell you, most professional traders who do great trades use 4 hours because every 4 hours the value fluctuates a lot. So they just look at that and according to that buy, sell, or whatever they like to do regarding the crypto. Okay, so now that you understand the basics of the timestamp of every candle chart, let me take you through what these mean. Now, if we just zoom in a bit on the candle charts, there we go. So once we have this candle over here, this is the bottom of the candle and this is the top of the candle. Now, when the candle is green, this bottom where the bar starts is what we call the open of the candle. And where the bar closes is the close of the candle. This is the lowest point of the candle and this is the highest point of the candle. So this is the lowest it's gone to its prices in 1 day. This is the highest it's gone to its prices in 1 day. This is where the prices opened and this is where they closed at the end of the day. Now obviously, if the price incremented, then it's going to be green, but obviously if it decrements, it's going to be red. Now in green, it's open down here and close up here. In red, the open is the upper bar and close is the lower bar. But the same goes for low and high currencies, because obviously the lower and high currencies it reaches in 1 day, that's going to stay the same for green and red. So now I hope you've gotten the gist of it, is what candlesticks really represent. So open, close, highest price, lowest price. And in this, upper bar is open, lower is closed, highest price, lowest price. And obviously green is when the price goes up, red is when the price goes down. So yeah, that's basically what they represent. Now, if we were to compare it with some of the money right here, we're just going to bring it down to some big chart. Okay, now look at this. In one day, which was 4th May 2022, we can see the price started at the start of the day. At the start of 4th May, the price was 37,740 and 73 cents. It opened at that, and then it went lowest to 36,677. It went from 37,000 to 36,000, almost a drop in 1,000. This is the lowest it went on 4th May. And the highest it went on 4th May was $40,034. So basically, it jumped around $3,000. But obviously, it went down again a bit, and by the end of the day, it closed at $39,689. That's what it closed at. Now, if we were to read the red one, this is for, I believe, 5th May, isn't it? Yeah, there we go. This is for 5th May. So if you scroll up here, we can see that on 5th May, the price opened at $36,520. The lowest it went on that day was $35,000, almost $1,000 lower. Then if we go up, the highest it went was $39,830. Oh, and sorry, my mistake. This is the close. On 5th May, it opened at $39,683. The lowest it went was $35,000, which is like a $4,000 drop, which is a lot. And the highest I told you is 39,859. So the open was 39,683. It closed on 36,520. So basically it dropped in at least $3,000, and that's what it closed at on 5th May. So that is basically how you read a chart, and it's pretty simple. It's nothing too difficult. So yeah, that's the basic gist of it. You can change the graphs if you want to. For example, if you don't want to see candles, you can change it to area or bars, but obviously this is a candle tutorial, so we're going to keep it the candle way. And candles is much better because every trader uses it and they benefit from it like a lot. So I'd recommend if you use it. And if I show you the different features regarding all these candle charts, if we go on compare, we can compare basically different types of stakes or different types of cryptocurrencies, and we can compare their graphs or charts. And if we go on indicators, in indicators, we can add different types of basically indicators that indicate different types of things. So if we add moving average, we can see the moving average in a graph form. So for example, the moving average goes here and then it rises up, then it goes back down. So if you are not familiarized with these candle charts, you can just use moving average for a quick skim through how the money's going. And yeah, that's basically the different indicators. You can use many more, but these are the main. Basically volume, which shows you the different bar charts down here, and moving average, which shows you the proper line graph. So there are two types of candles, bearish candles and bullish candles. Bearish candles are candles where the closing period of the price is shorter than the opening period of the price. And bullish candles are when the opening period of the price is obviously greater than the closing period of the price. Now, how you can differentiate between bearish and bullish is obviously using the timestamps. Now, according to those timestamps, what traders do is that if candle is bearish, they're gonna basically wait for the buyers to buy the trade, because by that what happens is that the trade prices go high and then the sellers sell it immediately, and that benefits the sellers. Now in bullish, basically what happens is that in a way the buyers win, because in the buying period is just quicker and the prices are low. So they set a bar real low and the buyers can buy it in low prices. For example, they buy it when it's like really low down here. So this is the difference between bearish and bullish. It's very simple. And yeah, that's what traders use mostly to associate with different types of trading. So yeah, that was the gist of the main candlestick charts, and this was for Bitcoin, obviously, but you can use it for any type of cryptocurrency, and it just goes the same way. There's no difference. The only difference is in the name of the cryptocurrency. The charts are just the same, and the way you can use them is also the same. So yeah, I hope this video was helpful to you. And if you have any problems or queries, you can tell me down in the comments. I'm gonna help you ASAP. And please like the video and subscribe to the channel. It helps me a lot. Share this video around with your friends and family if you can. And yeah, I'll see you next time. I hope you all have a great day. Goodbye.